All right, 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 all right. All right. All right, I think I gotta clean up my boxes today. Hey, good morning. Guten Morgen. Doge is up a bit this morning. GME is at 6%, but it gapped up, so we'll see. AMC is actually down this morning. Really just struggling to hold above that 430 area, 437 area, 438 area right here. Good morning. Yeah, pretty much. So, let's talk about GME. So there's a big beat, 300% beat on EPS. So they actually estimated a negative earnings per share, and they beat with a positive earnings per share. That's a pretty big deal. And I would say that even though this missed on revenue, and that's important, it's not important. I would say that's still that's a pretty mild miss, 23 million. I mean, in the grand scheme of things, 3% miss versus a 300% beat is a pretty big deal. Actually, we had a similar thing with AMC. It beat really big, I think, on EPS last time. And then, let me double check. Yeah, I mean, it was a big change. I mean, that's still not like 300%. It's 53%. But, and then this is basically negligible. You know, when they're expecting billions and they miss by 14 million, it's like nothing. So like that to me is interesting because it seems that both GME and AMC, there's an expectation that they're going to lose more than they actually are. And then when we look at extended hours, got to look at extended hours today because of earnings after hours yesterday. You got to see where those moves went. So this, I think, dropped low. Yeah, it looks like it dropped low first, then pulled back up. So it dropped down to, in extended hours, it looks like 25.71. So we're going to mark off 25.71. And then it pushed up to, afterwards, 31 exactly, which makes sense. So both those levels are pretty reasonable. I mean, they're basically the bottom and the top of this range here. It may be a little difficult to see that, but what I thought was going to happen was we would pop and then come back down. And it could be that all happened in extended hours. So I didn't have a lot of predictions for like the end result action necessarily, other than like what we predicted to the upside, what would happen if it goes up in a rotational symmetry. It'd be pretty nice versus going down in the head and shoulder where the target is down here. So there's really two very different directions we could take. We're going to watch this creek this morning, but I think the initial reaction I thought we were going to have happen was that we would, you know, drop a little, pump, and then come back down, and that's what happened. So pretty darn close. So I'm going to get rid of this because it's already happened. And what we mentioned was that we don't want it to come up and then not find support higher. So yesterday when we were talking about GME specifically, we did not want to pump up and then drop all the way back down through. So the good news here, and it is good news, the good news is we went down first, then we went up, and thus far, though it hasn't proven itself to be sustained, thus far it is holding like a higher low. I'm going to check one more thing real quick before I jump the gun here. Excuse me. It really just looks like this first move also. It's like a retracement of that move. It's kind of interesting. Okay. Let me go back to regular trading hours real quick. So the low here was 26.88. So I'm going to mark off 26.88. Man, I got like something like wispy in my throat. I hate that feeling. $4.30. No, we're not good at 4.30. That's below the creek. If this thing dumps down to like 4.30, I think we've broken through here. And that's not good, in my opinion. I would not like that. It's the stock market. Anything can happen, but if we're just talking about like opinions, I don't think that's a good place to be. Okay, so in extended hours, I would like to hold right here where we're at. That's what I'm trying to say on AMC. In extended trading hours, it did dip below here. So it came back, tested the floor, tested below a little bit. That's a higher low, considering we dipped down pretty far earlier in the after hours, which was around 25.71. But here I would not read too much into that because it's just a liquidity check. Unless it comes back through 26.88, I think we're good. If it comes back through there, it could be a problem. Like in theory, if this was a bottom, you could say that's like an auto reaction. But the problem is, maybe, man, this is a tough one. I gotta kind of like, almost like blur my eyes about it. I'm gonna have to get rid of these boxes, guys. I like that rotational symmetry a lot, but I'm gonna have to get rid of these boxes so I can't see anything. Yeah. We did that yesterday on stream just to talk about what that might look like. But I've already mapped it out, so if it's going to happen, it would happen the way it's mapped out. I don't need to have the boxes on here forever. Right, so I had marked off this pink zone here as like a no-go zone, meaning like we wanted to kind of hold up right here. I don't know exactly why at this point I chose that one as opposed to others, except for this potential head and shoulder neckline. So in theory, could it come below that and not break down? The answer is maybe, but it has to do with what we see back here. There's multiple necklines in a complex head and shoulder sometimes. So you can kind of look at them. Sometimes it's like all one, right? It's like really neat and tidy. That's not very often, but sometimes it is really neat and tidy. A complex head and shoulder is just one that has multiple shoulders, basically. And they are sort of mirroring on either side. Not very interesting. That's just what it is. But it can be a little bit dynamic compared to like a regular head and shoulder. So in this case, we've got a head and shoulder that's kind of marked off at an angle, and then another one that's marked off at an upward angle, so downward and upward in terms of the complexity. And I think that's important because essentially what's happening is what we were talking about yesterday is this is like a rotational move right here. to come back down. And I'm not going to redo the whole thing as best I can. I'll just do this one. This is a rotation right here. So it's a wave, and they're using the shoulders, the apparent shoulders, right? Those secondary actions that happen because of head and shoulder patterns, which is just a psychological thing, right? Going back and retesting levels. They're using that to come back up and recheck in a rotation like a wave. So we did a completion of that wave yesterday, and this is basically what we concluded, was that this is essentially what that wave would look like if, I've got it all kind of jammed up here, but if it were to complete, it's actually very fast because in theory, right, this is like rotation number 1, and then this is rotation number 2 right here. But, and this is a big but, there is the element of head and shoulder movement here that's pretty important. And when you look at the overall picture, you can see that this rise, there's actually a shoulder mark down low. It's not impossible that at some point this could have to come back down and then go back up, which is bizarre. I'm going to say I don't feel like that's going to happen because I think it already went low, right? We just marked it off in extended hours. It already went down to 25.71. So in a lot of ways, it's kind of already hit that lower mark and this lower creek. Like, it would be hard for us to say it didn't do that in extended hours. It did do it. So right here, it's already intercepted all of those markers. So it's more of a question of like, do you think it has to come back down, right? Do you think it's not enough and needs to do it in regular trading hours? I've been a proponent of regular trading hours over extended trading hours for a while, but I've slowly in the last couple of years changed my mind, and I mean very slowly. So the main reason that I don't particularly like trading with extended hours on is because markets don't operate on anything but liquidity. Like, they're all about that. So markets are fueled and run by liquidity, and that's it. Like, there's nothing else to it, in my opinion. If you were just going to boil it down to like what makes markets move, it's just liquidity drives it. Meaning, like, they're going to go where the money is, right? The problem with after hours trading is that a huge portion of the market doesn't participate in that. And so there's a shift in that maybe lately. It's getting easier and easier for people to trade after hours, things like that. The accessibility of things matters. So I think the accessibility maybe is pushing us towards a time where we're not going to have something like extended trading hours. It would not surprise me if within the next 10 to 20 years, they just don't have it anymore. It's like crypto or something, right? So there seems to be that kind of trend. And I have been an advocate that like you really shouldn't use extended hours for a lot of these trade setups because, again, like the market's not participating in it, and there's a reason that things open and close where they do. And at the same time, what we've found, especially in the last year or so, I think, is that there's been plenty of times where it seems like you have like a really good technical setup and it doesn't hit it in regular trading hours, but it does in extended hours. So it turns into this kind of game of will they, won't they kind of with institutional trading. Like, are they going to let the market participate or not? And I've been kind of like reluctant to use extended hours on the basis that in theory, like it should not be as relevant as people sometimes make it out to be. But like I said, I'm slowly changing my mind about it. I think that it's a good, there's good arguments for it nowadays because sometimes there's so much volume. There's so much trading that happens. It's hard to ignore that. And you can't push it aside when you've got weird wicks here and there that then mark off trading points. It's really bizarre stuff, right? And you've got, to some degree, like the dark pool prints and stuff that often happen in extended hours and stuff too. It's like there's a lot that goes on that you really should be paying attention to. So, anywho, this is one of those examples where it's like it kind of just depends on what you want to what you want to chart. If you wanted to chart extended hours, this move already happened. There's the gap here that's still there, right around the 2740 area. There's a gap here still. But in terms of that low check, it went down first in extended hours, then pushed up pretty high, right, all the way to 31. And it came back down again. And so far, it's been holding above 2688 for the most part. So that's positive. If we come up again, we're going to be watching really carefully because you could get kind of a repeat of what happened in extended hours. You don't want to push up high here, push resistance necessarily, and then break through that region at 2688. That would be considered fairly distributive because if you take it up at high volume and then take it right back down and break through that level, the reason you would do that is probably to come down at least to 2570. And then we have to contest with whether the creek broke. We have to contest with the head and shoulder mark. It kind of changes your immediate outlook. So on the other hand, if we come up and we build support higher, and I'm not 100% sure where that might be, but I would say that it needs to at some point build a decent amount of strength and support above 3050, then like right up here, then I think you're in a good shape to continue. And then we could potentially have a rally of like 30% plus going into 30-40%, whatever this is, going into the end of the year. So yeah, it's like 35. So like this is not, in my opinion, this is not like just hypothetical. This is a very real possibility. But the danger is present right here, which is the levels that we're at currently could easily turn south should we break back down low, especially around 2570. Okay. It's not the end all be all. It's just that the head and shoulder target does take you back down to like 24, which again, we know historically is a very important support. Could end up being that it holds support and we get a good bounce off of it. You know, that's a possibility. But lately, when we've come back to it after passing through it, as you can tell, we've done nothing but kind of like weaken off of it. Like these are all weaker pushes. So you make like a pullback, come back up, doesn't go as high, pull back, come back up, doesn't go as high, pull back, come back up, doesn't go as high. That was in a time when we were walking down low to get below 24. Now we're above it. So if it did come back down, you'd have to see it hold 24 and push back. I'm not saying it's not going to happen, but I have a huge amount of skepticism in my back pocket. If we come back to 24 right now, I would be like, oh, okay. You know, what's going to happen? What would be better is to jump this creek, which we've already done, back test, which we kind of already done, you know, and then advance. And all we got to do to advance is get over this guy right here. So, pretty close. Like if I were trading it like a swing trader, I would probably just get in after this jump and then have some stop losses in place. Do you actually own GameStop books? Yes. I don't engage with chat. Yeah. I read chat pretty often. I don't always engage because I don't want to. If you're saying something that I don't understand or agree with, sometimes I just don't say anything. And then sometimes I'll say something just to be like, okay, I'll engage with you about it. But I don't engage with every comment, because not every comment is equally as important. And if people ask me really good questions, or if they're asking about particular tickers or whatever, I'll engage with you about it. But generally speaking, there's not a reason for me to engage with chat like nonstop if I'm here to chart. Thoughts on markets being open 23 hours a day in 2025? Yeah, is there like a news posting about that? Like, where is that coming from? It's news to me. So, like, I would need to know where that's coming from before I could answer that question. If it's just coming from your head, that's very different than like, no, there's an announcement. It's already in the works. Like, anybody could say at any given time that they think that markets are going to be open 23 hours a day the next year. Like, I could have said that every single year the markets ever existed. But you have to have some kind of reasoning behind it. So, like, give me a good reason. And then I'll engage with that idea. I don't think GameStop is... I don't consider it like a meme. Like one for like a short squeeze. Obviously, it is high potential for stuff like that because of the community behind it and the massive amounts of shorts that are interested in shorting it and the massive amount of retail that are interested in supporting it. It's a powder keg, for all kinds of shenanigans. But no, I mean, like, I grew up playing games. Like, I'm a child of my era, and I think that brick and mortar stores have always had like some trouble, and they're still having trouble. More and more of the stores that you see that you maybe grew up with, if you've been alive for the last 40 years or whatever, have been going by the wayside. I mean, it happens every year. So you have a I think there's a lot of potential, though, for GameStop because of esports. And I don't exactly know what that's going to look like, but I feel that it's just sort of a given to me. Like, if at some point they can kind of work through their collectibles, like that's going to be their big thing, is the collectibles, get a better online presence. Their online store's fine. It's just, I don't know what it's going to look like, but the idea of buying stuff directly, the SEC approved of it. Well, again, like, I don't know how I missed that. Maybe I just missed it. It seems like pretty big news. So I'll look it up. So this was really recently. This was November 29th. "24X has received approval to operate as a 24-hour exchange for equities. A new stock exchange aiming to offer 23-hour trading will launch next year." The 24 exchange. when liquidity is low and pricing is poor. So there's a lot of articles here about. Yeah, I think it's going to be rough. So the approval comes as the New York Stock Exchange seeks to extend its trading day to 22 hours, reflecting the industry's broader shift. Wonderful. So now we can't sleep. Tyler Gillespie, CEO of Healthy Market Association, warned that small overnight trades could trigger significant price movements affecting larger positions. Yep. Okay. The approval comes as the New York Stock Exchange seeks to extend its trading day to 22 hours, reflecting the industry's broader shift towards extended trading hours, which is kind of what I was saying. Before launching overnight sessions, 24X must coordinate with rival exchanges to manage a consolidated price tape system. See, that's the confusing thing to me. This development marks a significant evolution in U.S. equity markets, traditionally limited by settlement complexities and investor protection regulations, while other markets like treasuries and major currencies have long operated nearly continuously. Well, it sounds like there's a new exchange. It does not sound like the New York Stock Exchange is adapting it just yet. So that's a little different. So 24X is a 23-hour market. It's going to be messy. They actually, that little article I just read touches on some of the major concerns I would have, because the 24X market would have to consolidate, it'd have to make its price work with the New York Stock Exchange. That doesn't even make sense. This is meant to bolster AI-driven trading, widen the gap between retail and financial. AI can monitor multiple markets simultaneously, thrive on continuous data input, exploit the opportunities without fatigue, and make high-frequency trades nonstop. Yes. So if it were like a market-wide thing, I think it might be less crazy. Like if it were like the New York Stock Exchange, I would think it would be a little bit more stable because everybody would be on the same kind of page, I guess. The idea of having a new exchange is quite odd. I don't fully understand that. Like we already have a couple exchanges, but like how in the world do you just add a new one? That operates on completely different hours and expect it to be like not crazy. Yeah, so I don't know. That's a bit different than like, oh, everything's going, but it is a big deal. That just happened. I don't feel as silly about missing it. So that was apparently news on November 29th. So I feel less bad about missing it. But yeah, I think that's the market trend, right? Like, I haven't really felt very strongly that you should use it because, again, liquidity is low and price movements are erratic and things like little things can make huge movements. So it's always been like a big meh to me. Like, I don't know why you would trade with extended hours on, but I get why, like chart, I mean, with extended hours on, but I get why sometimes it's significant because we do have sometimes a really high amount of trading in certain extended hours sessions. I don't think that should be ignored, especially the levels that are marked off. She's just fighting. Well, she's like play fighting. If she starts hissing and growling, we got problems. But she's with my other cat. Sick call on Elab, boopsie. It did its big move to 283 yesterday during market hours and retraced to 227 by this morning. I'll take a quick look. I made a sick call. I got to check it out. It's funny, dude. Oh, I did something good? Okay, let's check it out. I mean, the expectation was it would hit certain levels, and if it can breach certain levels, we would have targets. Yeah, right there. It looks good. It went up to its channel line, so it made the move. So it did push up and come back down here. I don't really like the way it went on the top because it kind of faked a resistance or a support and then went up. But this is a really fast moving stock. This is a 2-hour chart. This is all like really quick. This is since December 3rd over here. So the current time frame we're in, it's like talking about this breakout, I guess, yesterday, Monday, Tuesday. So current breakout we're in is fine. I guess the best news here is that it did go up and hit the top targets. So, yeah, we got a good double bottom, and then that was really where the trade was. So, I don't know now. You're going to have to just kind of wait it out. Because it didn't take this lower path, which is fine, you know, the expectation was that it does one of the two, and it did this, right? It jumped over. Can't even see that anymore. My lines are sometimes behind the bars, so you can't see them. So this looks like pretty close to what happened here. And this was like the extended target. So it went pretty high. So at this point, the question was like, if it holds here, it should advance, and it held here. I'm trying to remember exactly what I said, but I remember making like 3 marks and talking about the breakdown level, the breakout level, etc. So now that it's made that advancement, I won't spend too much time on it, but I'm going to look at it real quick. This was just a guess, I guess. I don't know where this came from. Probably was talking about this as a creek. So now you've got to use the higher trend. So it's just going to be a waiting game to see if it breaks here. Right. And I said this would be like a buy-in if it came back and found support. And there's a gap, so that's a positive. Maybe a positive sign. But I wouldn't exactly buy just yet because the buy-in idea was based on coming up, pushing resistance, and then finding support. So much like anything else, you just want to get that support now. So I would defer to a localized creek here, and I would suggest that if it holds, the buy-in is like there at like 222. Assuming it doesn't go low, it would be like that. And then I don't really know for sure that this breaks out either. So this is another one that I couldn't tell you until this forms on the top. It's like an SOS, but in theory, this could just be like an early auto reaction with a phase B top. This didn't come like way up here yet to fill these gaps up top at 3. So yeah, so you'd have to kind of just wait. I know it doesn't really give you much to go off of, but that's where it is right now. So the rest of this is like speculative here because I think that this still has the opportunity to come back down in December, and it could potentially make like a whole nother I mean, there's a lot of time here. This is December 20th. It's not that far away. So there's a whole lot of time. So right now you've got like a massive kind of hook motion. That's a big trade. You could think about it all as one big auto reaction or an auto reaction with a phase B. You could make an argument this is already like an SOS. It did come above that top. That's what I'm saying right here. If it's an SOS, it'll just take off again. It'll probably be pretty abrupt. And head back up towards these gap levels. But last time it did this, you can see that like after it made that advancement, it backed up pretty low and then advanced one more time. That would be like what we're saying here, like backing up to about 223 and then going all the way back up towards the top. You just got to be careful of this kind of stuff. Like if it drops through and then creates that cat ear type structure where it looks like an M that's double topping, you got danger there. So that's not here yet, but it wouldn't surprise me because of this overbought nature. So yeah, it's lower, but maybe you could have a stifled move. So just be mindful of that. It's definitely not impossible that that happens. And this could be, again, a setup for a larger spring, but you have to kind of wait. Let's check AMC real quick. It came down again. You know, it's kind of hanging on by a thread here. I got to be just honest about it. It's not as strong as I would like. You know, I don't really mind hitting the 435, but in the grand scheme of things, if it holds, it holds. But I'm not gonna complain if it doesn't hit my level and hold my level. You know, 435 is fine. I'm just like looking at it from a helicopter standpoint. It's already kind of missed the 854 retracement here. So at this point, if it's gonna double bottom, fine. You know, we did it back here. We double bottomed after this weird up thrust and drop. And then we ended up rallying back to the top and then continuing. Could it be something quite similar? Maybe. I mean, the thing about this is I don't necessarily think it's 100% dependent on GME all the time, but I do think that, yeah, like GameStop running up in its rotation would lend a lot of possibility, perhaps, to AMC. Whereas if GameStop does come back down and try to form a more complicated head and shoulder structure here, you know, it's a different story. It's hard to argue that AMC needs to run or something like that. What I've kind of contested is quite controversial, you know? I mean, to look at where we are now, I got to say it's not avant-garde or something. It's just I'm being quite optimistic because of what I think is going on with this area right here. I could definitely see why someone looking at this would think that's bonkers and that it's just going to break down and like head low, which is why I've got the low target here, because it's there. You cannot ignore it, right? And it is quite the opposite of the other expectation. And some people are going to say, well, you know, Booksy, we do this, and then what ends up happening is we get some weird Frankenstein version of it, Frankenstein monster version of it, where you end up somewhere in the middle, and you end up at 5, or you end up at 450, or this or this. I know, but the thing is like right now where we are, there's not really any reason for that anymore. You know, in the past, when we were looking back here or here even before we broke out, like talking about way back in like the summer versus like the fall, there's plenty of times where when we advanced and then we didn't go, there's not really any reason to expect anything else to happen. You know, you get to these kind of do or die moments, and then if it doesn't work, it's like, okay, well now you're just creating time. Like by dropping the price down here, they just generated like a huge amount of time. Now you've got a huge amount of time to get back to the creek, right? And that kind of stuff happens all the time in the market. And it happens on AMC just like anything else. So we've had these moments where we've like tried to advance and then we drop and you're just like, meh. there are moments of like it could break down further, it's important, or it could break back out locally, like a creek cross locally, that kind of stuff happens. But in terms of like do or die type mentality where it's like it's got to do this or else, we've not really seen too much of that. Like I've mentioned back here, we talked about this a couple times. I'll just really briefly go through it. One was back here in July. The other was probably here in August, but I think when it hit that 520, that was the nail in the coffin. And then the only other time that, again, we really approached the creek was September 13th. And that ended up being the biggest, most important in my opinion, because we did not do the cross up and over. Instead, we went down. And that defines a new wave, right? This kind of stuff right here was all very like important. Not going to say it wasn't, but it was around earnings and after earnings, highly volatile creek crossing. Okay, all of that's fine, but in the narrative of things, you would look at this and say, what else could possibly happen here? Like, essentially what you've done is you've done what is I would consider to be like a portion of the wave, maybe 70% of it. I don't think it finished, which is why I still think there's possibility for a quite extended upside. I've already made an argument for that. But based on where it is, it's really come right back down to that creek. It's just super low. It's just super low. And that's not a indictment of it. It's just is what it is. We've talked about this again the last 2 weeks. It's nothing new. I'm just trying to make a point that like it's a little bit different right now, in my opinion, if it breaks down versus like holding the support. So yeah, could it double bottom maybe and then advance? Yes, but where is that coming from? Like what would be checked by that? I don't know what the heck would be checked. Like there's nothing there. Like we've already got our creeks established. There's nothing in between these two creeks inherently that just needs to be checked. Everything else would be significantly lower, below here. So I'm kind of like, I don't really know. Unless you're going to come all the way back down and like do a massive double bottom or something at like 4. Or it's like this is like an up thrust before a spring, and this is the phase B bottom. I don't know, man. Like that's a big question mark that it just doesn't really make sense, If it did that, I'd be like, okay, I don't really get it, So I feel like at this point, I will say that dropping through here on weakness would probably be very bearish. Like in my book, that's not good. There's a schematic we went through yesterday, and I'm not going to redraw the whole thing or anything, but like basically once you jump this creek, if you go up and test high liquidity, then break back down through that creek that you just jumped, we spent a huge amount of energy just getting over it back here in November. I think that's a difficult one for me to argue that would be good. From a technical standpoint, I can't make that argument. And I've been in that situation before and things have worked out for our benefit. It's not like it's always bad. If I can't make the argument, I can't make it. I will argue till I'm blue in the face if I think something is legitimate and worth talking about, but I don't know. There's some folks are saying like we're going to go down to 430 or lower, and I'm like, yeah, I don't think I could make an argument about that being bullish. And then, even in the most simple of terms, I suppose we could use like a widening here, like that rising widening, and just say, yeah, that's not good if it breaks through there. Right. So, like Frank's saying, it is it's at the 786 from 1010, October 10th. So this all as a whole as a move, yes. I think what would be confusing about that for me is this double bottom here. I feel like a double bottom throwback in this case, because it broke the original uptrend, could signify that that is a reset and that you could do the retracement from here on November 8th. It's a good discussion. I'm not really sure. I guess if you were using like a higher time frame, you might not even really care because you're just dropping this trend lower. So I said it wasn't at the 786. I was talking about the move from this bottom on November 19th. But you're right. It is at 430. So if you were using that as a standard, you would consider 423 maybe as a possible bounce level. It'd be below the the trend. So it'd end up having to be like a fake out reversal if it were still bullish. Like it's faking a breakdown. Does AMC do that? Yeah, but it's like what that entails is a little bit more nuanced. So if you were to do a fake breakdown, this is super steep. I don't know. It would have to be like super fast. It couldn't be this long. Because what it would look like, this is as wide of an angle as I can draw right here. It would look like you break below this. Man, it would be ugly. I think it'd end up being like closer to like a double bottom, to be honest. I can't imagine why this wouldn't sink lower. Unless it's like 417 again, like a triple bottom. That could be really strong. They have triple top break up in Wyckoff. They could have triple bottom as well. But you basically would have to jump this creek and then re-advance back above here. If that happened and you came back into the trading channel by like the 16th, Monday, big maybe, but it potentially that could be a bullish move because as long as it holds, because the you guys are like, well, that's always the case book, so you don't need to say that. I know. The reason I'm like hesitant about that is because that's really hard to predict those kind of movements. Yeah. And it's super deep retracement. Like, that's really far back. Some of you will probably note that going down to like 420, that was where the offering, they had two different numbers. One was 620. I don't know why they even why they even said that. And the other was 420. Oddly, 620 is pretty close to the SOS, and 420 is pretty close to our bottom. So I think the idea of them doing it 520 and that spread, they're really just defining that range. They were expecting the offering to be done within the range. They did the offering above the high liquidity, presumably to absorb a lot of that. So I generally think that that's fine. Like, I think the way they did it makes sense to me. If you're going to dilute, that's where you want to do it. I'm not happy that they crushed that momentum at all. That's not what I'm saying. I'm just saying, like, position-wise, you'd want to do it above high liquidity on the shelf to absorb it. But I think that this is a big question mark in my mind if it were to do something like that. And I just said I couldn't really argue that that's bullish because I can't. Like, I wouldn't be able to argue it's bullish until it comes back above. This is 100% like hypothetical. This like middle right here. So it's not looking good. So once again, you see this kind of pattern sometimes on AMC where it will take the, it will absorb the green and then like take the red with it. This has happened quite a bit in relation to like IWM and GameStop, where like it doesn't participate in like the upside. It just participates whenever the stock starts tracing down. So while this was like running up, 5 or 6%, it's just sitting really low, just chilling out. And then as soon as GameStop starts kind of losing some strength and coming down even a little bit, AMC is like bleeding, right? Yeah, not looking great. I'm going to do another, it's frustrating. I'm going to do another quick little doodle because there's something else that I want to see. So during this fall, we have a middle wave being created that I want to observe. It's not looking great. We need a reversal here is what I'm trying to say. Right, so there's a middle wave here. It does go back to this original M. Yeah, right there. So this was the M cross early on. This is like the build out low and then it jumps up. And that's generating like a downward channel. Who knows? We could end up in a completely different spot by the end of the day. You don't want to like ship it too quick. Yeah. It's here. So this was already like built into the chart, I think. Yeah, it's the same line. I mean, I hate to say it because there's gonna be a lot of people that disagree, but this was already there. Like this was already a present possibility. I don't know if they knew for sure that he was going to dilute necessarily, or that they would lose certain levels. That's not really what I'm saying. But in terms of like the technical setup here, like why we're bouncing where we're bouncing, et cetera, it's already kind of built in. The flags were there. Like this is really significant right here. So GME is at 2850. AMC is at 435. I'm having a little bit of an epiphany thought, and I don't want to give you guys super strong hopium, but we need to address something that how am I going to do this? I only have I have to leave soon. I have to leave in like 30 minutes. do this. Okay, so during let me just pull up a chart real quick. So during what I call the master fractal, which doesn't really matter to you guys because you don't have to think it's the master. I use it as a guide, okay? I don't use it as like a perfect doodle. But during the master sequence, there's something interesting that happens, which is a break from I learned my lesson about this in August, okay? So like this doesn't always end up bullish at the end. We already know that. So like you see it rocketing at the end, you probably get really excited. That's not really how it works. But in the grand scheme of things, this is a wave of consistency. Like it tends to be very straightforward. Usually this is going to denote direction in the long run, which I think is ultimately down. I've already talked about that. Not like super long, but you know, midterm, 6 months out or whatever. And then I think we're going to explode to the upside. But this is essentially the same exact schematic. Okay, so what you have is you have a early buy or early drop in. There's a bit of a weakness there. Okay. Then you've got the build out, the big reaction, and then it starts building out the range. Big reaction starts building out the range. This is where you start defining like directional movements later, potentially. Usually this is right here where you see like that cross. We talked about that yesterday with the cat ear and the hook. This kind of tells you where you might go on the push up. And then what makes this one challenging, of course, is that we have really difficult to follow lines. Like they're not really following through very well. And the assumption might be that it has to go up high or something. I don't necessarily think that's the case. But usually what we see is that, and this is where it kind of broke, I think, because it kind of went, it seems like it went awry, like it didn't quite do what we would expect it to do. But this is the M cross low. This is the one we talk about, like down low. There's always an M cross where you're trying to jump that creek down bottom. It's pretty straightforward. It sounds complicated. It's just a wave. And there's the M. Then once you build out on that M right here, you get the big breakout. You get the run up, pull back, run up, which probably, again, could have come higher. It didn't come quite as high, maybe as we would like. And that's where I'm like not really sure if it's just not finished or was that like the end. I'm not 100% sure. We've talked about how like the green, in my opinion, was the stronger of the setups, and I didn't really like the lower, like I call it the yellow and the red right here, but it did hit the yellow, so it definitely got to one of them beyond a shadow of a doubt. It did, and then. Yeah, then from that point forward, this really has shown a lot more weakness than like this particular example. It looks a lot more bearish, but the expectation that I had was we were going to get that second. So we're going to get a 1 and then a 2, like a 1 and then a 2. So there'd be like a big wave up. And I've been arguing about this for like the last week or so, that I think that the waves are not quite done. And then it just kind of occurred to me, thinking about this, that there was another place that this happened on AMC where it was quite volatile and ended up not advancing, but it did have a similar pattern. And that was in 2000, I have no idea where this chart is, so I'm going to go ahead and like hide all this junk because I don't want to see anything like crazy. I just want it to be clean. It was right here. So in this particular build out, this is a bearish setup, okay? It's not like exactly the same as what we have now, but it is a bearish setup where there's like a rise. Obviously, you come back down and you try to come back up, and it's like a UTAD kind of thing, right? Where it comes up high, but it doesn't advance again. I had been comparing our setup to this area here because it makes the most sense to me in some ways to compare it to here for a lot of reasons, because we only had that auto reaction and we hadn't quite done anything else. So I've been looking at this as the example. I already did a whole chart comparison to March. I'm not doing a chart comparison to March right now. The argument was straightforward that it potentially comes up to like 869, maybe even like 13. But what I haven't done is I haven't looked at this like bigger picture. You could take this a step further if you so choose, and you could take this idea of lower build outs. Yeah, you could take it like a step further. I wouldn't go too crazy with it, but you could use it as a model for understanding, like, as a distribution, this kind of being a gigantic double M shape. And I guess it's, again, depends on how you want to look at fractals. But what I see here is I see the same thing, because what this is down bottom in its simplest form is a wave cross right there. And then what this is, again, in its simplest form, is a much larger but very succinct wave cross as well. And so, like, while there's not a kind of a one-size-fits-all perfect answer for this, there is like a really similar comparison that could be made, which is in this particular time frame, after it came down, the early cross happens pretty quick. It's like right here. So that's the widest angle that you can draw. And this is, again, coming from this April 20th like pivot point where it broke this top. This is kind of the widest, well, this is really the narrowest. So there's 3 crosses that happen, right? So you can see it really cleanly. If you draw the lines really neatly, you can see 1, this is an M cross right here, comes way back down. 2, M cross right here. This one advances and pushes high, then comes way back down. And then really you're going through like a lower M right here, because if you take that into consideration, what we just talked about yesterday, this would be like a wave up to try to push resistance, which is what it does right here. It's like an auto reaction, right? So it's like a wave back up to try to push resistance, and you're crossing the first 2 creeks, and then you're leaving the third behind. And then this would be like the low wave of crossing that final creek, and then this ultimately becomes then the high wave again for the rest of it. It's an expanding kind of motion, but what's interesting about this from 2022 is that this was also part of a diamond structure, and that diamond structure works really, really well. That's like 138, and then you can do like a similar move over here, and it's like, if I can get it right, it's right on the button. So, like, again, from a technical standpoint, this is a really simple, see that intersection? So this ends up being like a diamond structure, right? And then what's crazy about it, and this is where I noted my success in the past, was when I did this, I want to say that it was from this drop down level, like the hook or something, to like liquid center, because I determined it was coming from the back end here. Like they were transferring this reactive move off of the diamond to the other side. And so I took that measurement right there and I applied it forward here. and it's exactly the same, and like exactly the same, and that movement is essentially what you'd expect in a diamond breakout, that you would, except for it didn't give up the rest of the move, right? Is that basically you're generating like an upward move of the same entry move at the same angle. So if you didn't know that, that did happen in 2022, and it was probably one of the best trades I ever made, to be honest, in my life, because of how perfectly like it's set up and how I got it really like spot on. And it kind of boils down to a simple idea of almost like an impossible to see creek cross unless you're looking at how it was widening. And then at the end of the day, what we talk about is this is also like the middle of a wave here that comes down, right, as well. So it's all part of like a bigger motion, okay? The reason I'm mentioning all this right now, like this very second, is because the one of the things that stood out to me when we were in this time frame, get off, you're breaking it, cat, get off. You're too heavy. One of the things that stood out to me in this time frame was that widening that occurred on the bottom going up and out. And I had, I think I've mentioned this a few times, but there's kind of a wind up and unwinding that happens when you look at the right side of the quote unquote master fractal, as you want to call it, like, which by the way, like this applies to as well. It's just that this is downward, not breaking out upward. So you can look at it and think, oh, it's completely irrelevant. It's not the same, but it really is the same. Like it's the same basic principles here, here, here. Okay. And then the problem is that this end result is nasty. It never makes the jump up and over. And there's reasons why that happens, because this doesn't break down. And so one of the things that I've noted on this after this time period is that there's a head and shoulder motion, because this is a very odd kind of widening motion. That same widening motion does apply here as well. It's just hard to see like at first glance, and ultimately that widening that's appearing right here turns into a breakdown, right? But it also turns into a bit like of a head and shoulder. So you get shoulder, 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 shoulder. And then there's even like a weird little like dip entry at the end, and then like dip entry out at the end. I call it the winding and unwinding of the right side, as I say. Like the right side is different than the left side. They seem like they're the same because they're both waves, but they're not. You even see some of the same parts. You'll see cat ears here, you'll see cat ears here. But the reason they're different is because you've already traveled through the range here, and then the right side is like a retraveling of the range here and deciding where you're going to go. It's like the satisfaction of the range, right? So when I noted that, I thought it was kind of interesting because this is like this widening upward. I just made it look really bad. And then in 2022, after the initial reactions, which are there, it's very similar to like these guys, really similar looking to these two right here on the bottom. And then it starts doing that widening. It continues to build out and like widens upward until it breaks down. Well, that was again, I'm trying to kind of rush through this. I'm not staying on much longer. So you guys, I'm not trying to bum you out, but I'm going to do my best to kind of put a pin in this. I'll come back if I can today, but I have to go to a meeting soon, so I'm going to be heading out. I talked to you about it yesterday if you don't remember. So during this wave, there's like a compression here, and then it goes into like a widening stance, and it builds out in a very like volatile way through this widening into this top. And at the time, I distinctly remember that there was a lot of talk about Wyckoff, and there was a problem because it came above the auto reaction here, one of the early auto reactions here. It came above it and then dropped below. And I distinctly remember talking to Stockfather about it, and we were both like, usually that's not very good, usually that's not the best. Shouldn't come down that low, but it did. And I think that in the end, it really wasn't a very good Wyckoff setup anyways. Like, it doesn't really obey a lot of the rules of Wyckoff, so you really shouldn't have been maybe using it religiously. But I do also remember that there was a angle from the bottom that was a really clear widening off this pivot that just, it never left it. It always used this as an angle of exit. And anyways, I'm bringing all this to mind because this was the same kind of moment of like, it already made its advance. It kind of pushed back into previous liquidity. It would have been, I think, I would have thought this could have been an easy argument, and it was at the time. This was an easy argument for bears to make, that it was about to drop. And I distinctly remember having to kind of fight the urge to call it dead because it was really, really struggling down here when it started bleeding out to kind of hold on. The thing that mattered, though, was that it ultimately doesn't break down. You know, like during all this volatility and these creek crosses, there's massive swings. These were like 50% swings every few weeks. This is a long time period. It's like 10 months or something ridiculous. I don't know. Maybe not that long, but I feel like it was a long time. It went from May through August. It's not 10 months. I don't know what I'm talking about. Like 4 months, right? But it's like every few weeks there was like 50% swings. These were big moves. It's kind of like what we're experiencing down bottom here. So these were not without their volatility as well. And yeah, and I kept saying I kind of had to fight the urge to call it done when there was still something left in it that just, it hadn't been met yet. So I feel like it's a little bit of a stretch because we're not quite comparable. It's not like perfectly comparable, but there is a similarity in the way this is moving. Especially this, like a push up that advances back to the drop down level right here happened. That first drop, which is this cat ear. Because if you take it like, if you take everything way too literally, like way too 1-to-1, you miss like what's going on, right? If you take it like way too like, oh, it's got to be exactly like this like fractal or exactly like this particular set. It does not. But you have to look at like what's being met. Even though this is pretty different in terms of like the movement, right? We would suggest that, yeah, this is pretty different. I mean, it doesn't look exactly the same at all. There is something happening that's very similar, which is this is like essentially like an S-curve down, just like this is an S-curve down. This is a cat ear down, and this is a cat ear down. And we've already discussed that. We've talked about it. This is the left side of a right side, you know? So yeah, I mean, I think there's a simple enough answer here in that setup, because this is a cat ear here. And so if we take that into consideration, that's just another way of looking at the chart, guys. This is met on the first push, just like this is met on the first push. The second push here goes up higher. It actually goes up to nearer the second push to check it, and ours does something similar. Is again, if you look at the cat ears, this is ear 1 right here. This is the lows, even though it's super volatile. I know there's an upthrust there. I'm not ignoring that, but I'm saying that I don't think that's part of the cat ear. That's the cat ear. This is the low wave. That's the high wave. This is the first. This also goes up and meets that second one right here. It's a check on that liquidity. Which means this is the top. This is like the bounce in with the big reaction. This is the one that in extended hours went quite far. It's a sell-off method. It's not meant to be looked at as anything else. You might be looking at it thinking, well, it's a continuation then. No. It's not continuation from this being up. It's sell off from this going down. That's the difference. So one would look at this and say it's a reaccumulation after a rise and a fall. It's reaccumulating, then going to continue up. Another would say, well, this is just a big drop, right? And then this is a reaction from that drop. It's almost like a redistribution, which you won't like, but that's kind of the way you would read it, which is fine. You may not like that, but you got to remember, like, the same thing happened in 2020. It's no different. Like, it had those big reaction up after like March, and then it just takes a lot of time to come back down again. That top in that range is distribution. It's a distributive top, right? So this would be considered redistribution perhaps because of how far it came down before it started this. Again, that doesn't mean it can't go up, and I've already talked about that extensively, that I think that's a possibility. So what this looks like to me, and given everything else we've talked about, is that it's missing, I think it's missing the last piece here. I think it's missing the, it may be missing a lot, but I think it's missing the last bits here. Now this is interesting to think about, because this being the fall, I think it's very curious. How would you do that? I don't know. We might have to like seriously nitpick. Yeah, that's fascinating. Well, and then likewise, like almost all of these are, this as a wave also has that 50% cross schematic as well. So that's another thing we could use potentially here. Excuse me. This is like 50%, and then you can drive a price through it, and it gives you roughly where you end up in the future. A lot of stuff that I've kind of learned over the last 3 years have been derived from this area because of the way that these things set up. You can see the directional movement, right? And that's the hook that you come back to later, just like we were talking about yesterday. It's evidenced here, and it never broke above it, and that's where it fails and then rejects. And had it broken above here, I think this would be a very different story, but it never did. So when you look at it from that point of view, yeah, this is a spring. It's also a sign of weakness. It's weird, right? It's like, yeah, this was a spring in this range. It was. But then considering like that setup, this is also a sign of weakness. It's pushing through that rise, and then it's not holding it. This is where the breakdown was official back in April 2022. I remember Stockfather saying as much when it hit April, and I was like, yeah, it's pretty much it, because it just failed to continue. So it lost too much ground. So I would suggest to you that this widening right here is indeed the same, and that it's not finished. And we already talked about this previously, but like all of that in your brain really kind of lends itself to a simple enough understanding of this as a driving force up. I'm gonna get rid of some of these like parallels. I think it's this one, man. I really do. I know we've kind of looked at 3 or 4 different ones, and I'm like back and forth, but I think this is the one that has to jump over or won't move forward. And this is 650. Because it comes off the original trend from this bottom. There's 2 markers here, and I've had flip-flops consistently flipping and flopping between the two, like, which is the right one? Everybody's going to think you're wrong until you're not. So you got to like take it for whatever you want to take it for now. But I'm going to keep this in the back of my head because I don't believe that it's over. Yeah, I think the struggle is that this doesn't come up as not enough, but it's definitely there. It's that same intersection that we're looking at with these lower trajectories, and then the possibility that if it continued, which is a possibility, the possibility that if it continued, it would go up to the next trajectory and then potentially even higher, because that continuation would be like a squeeze, but it has to get above this mark here, this blue mark. So I'm actually going to make it like blue so that I remember they're connected. I have a pretty good memory for a lot of things. As you can tell, I kind of remember weird stuff from the past. But I still forget stuff, so I gotta like mark it down, or else I might forget. So if it jumps above, it can go up to there, and if not, then it's just like August of 2020, 2022 basically. I don't think it has to be identical in terms of like the way it looks, but this is where I think you could run into some serious trouble with downside, which you've already kind of mentioned. I've truncated this quite a bit here and there. Like I know we've talked about 13, then we talked about 869, then we talked about 740, then we're talking about 650, and you're like, man, when's it gonna end? Well, this thing kind of makes everything a little bit awkward, like this gigantic move. But in theory, like those other targets are still there. I don't feel like they're bad targets. I just don't think that if that window crosses, you cross through here and it doesn't hold, it breaks down, I think that you just have to let it go. You got to be willing to say like it's not going. Because typically what happens on the right side is you get the build out up, but then you're still going to have a pullback. It doesn't matter if it's bullish or bearish. It makes no difference. Like this always, once you get to the top, like it always has to come back. Even if you've already kind of done a lot of those checks on the way up. And they did. I mean, like this area right here is just a simple example, but you could look at the one we just looked at. And you could say like, well, it already made all those checks. It doesn't need to check it. It doesn't matter. You know, what defines the difference between what happens here and what happens in like 2022 is what happens when it comes back down. Like this holds. And in 2022, it did not, right? It ends up breaking down. And there's more to it than that because obviously the creeks were really, really low in 2022, like super, super low. So by comparison, looking backwards on it, it's like, where did the creek go in 2022? Alexa, turn off the timer. It went really, really low, like way down here, you know. And this is going to then define like the future of price movement, essentially, for AMC, right? Like that, basically. But it broke down. I mean, that's another thing. Is like, had this been bullish, what would have perhaps happened is that this would have come down and it would have done the same thing, but it would have been higher up. And then at the end of the day, like you would have expected this and there could have been like a mild drop, but then it would have come back up. It would have held like the higher creek here. So presumably it would have been like right there that it would have held and it didn't hold. So it had to, you know, it had to come back above this support that was dropped. This is where the weakness was. Everything was right there. This is where the center liquidity was. This ultimately would have been where it took off from instead of taking down from. This is a very significant moment in the stock's history because it's the pivot that you could easily have missed, but it's ultimately like right where it finally like hit that middle liquidity and went the other way and never looked back, right? It like never quite gets back there again, you know? That's like the middle breakdown. So it may seem a little bit confusing if you're just kind of like coming in on this, looking at it, but it's actually pretty straightforward. The jump that happens here, these jumps are building out. They're generating like movement upward. There is buy-in here. This is 180% of upside on the whole. This was 2022. At the end of the day, it does react much like a waveform would. Comes back up and hooks onto that original trend. It does react much like a diamond would. It has the exact same reactive move at the end. Like the diamond breakout is like basically perfect, including the angle of ascent. Like it's mirrored. I mean, it's a super solid move. It's super easy to see and identify. One of the things that's very confusing about it is the widening and then the subsequent breakdown, and that widening being like, oh, it could be building out head and shoulders. Well, guess what? It did build out head and shoulders. There's a head and shoulder right there. You know what I mean? It just didn't happen in a way that maybe you would have expected, right? And I would even go back and say that, and I've never done this, and I'm not going to necessarily like spend a lot of time doing it either, but I think you could go back and look at this as a series of shoulders, but I haven't ever really tried to do that. You take like this angle, I guess, and just keep applying it downward. Sure, it kind of works. And like level to level, are each of these kind of met? Yeah, you know, they are. It is head and shoulder kind of motion, it's just down. Again, winding and unwinding, right? Like winding and then unwinding. I think that you have the chart to prove that that's a possibility anyways. So when I look at this, I'm like mildly optimistic still because I think that just again, from my own perspective, I don't think it went high enough. I think that it hasn't gone high enough yet. So this is starting to remind me a lot of what happened in, I hate to be like that guy to be like, oh, it's going to be like exactly the same, but because nothing ever is exactly the same, but it really does remind me a bit of 2022. And when I traded the bottom of 2022, which I haven't talked about, and I'm going to have to kind of like leave it here for now. I'll check out GME one more time before I head out. It's at 9.28, so 9.28%. One of the things that stood out to me here was on the M cross when this jumped over. This is a weird looking M cross. It's kind of on an angle upward, but you can see it clearly enough like that it's right there. All right, I don't think it's very hidden. It's just like awkward looking because it's kind of rising. So this is like the first attempt, and you can see very clearly with the RSI that it was already going down. You really see it here on RSI, the double M shape that we look for. What's interesting about this is there's a divergence here on the RSI with the price action. It indicates it's going to come back down. We saw the same thing locally here, if I'm not mistaken. Yeah, there was already kind of like a downward angle ongoing right there. It's almost like it's just missing like the last little bits here. Like it just doesn't have like the last little move. But it looks otherwise it looks pretty much the same, you know, to me anyways. Yeah, there's the downward angle. There's the retracement to low. I'll tell you this much, if you're sitting out there like thinking it's the end of the world and it ends up turning around really abruptly, you're going to get slapped in the face because it would be a pretty succinct 50-50 move like I've been suggesting all the way up to 650. It'd be a big move. It's not set in stone. If I'm wrong and it's already made that move and it's just kind of gone, then it's gone. But what stands out to me right now when I just did this little parallel structure is there's a synchronocity to that. There was a parallel structure back here as well. And it had built out early on the upward side with these downward motions like here and here. And then when it got to the top, it actually comes back up and breaks out. Yeah, and there's the little, see that? It's the same motion, because I can't see anything. Your chart's a hot mess. It's the same general motion though. It's just low. It's really low. But it's like, it's the same motion, you know? Like that's the build out across the S-curve. And then what happens is the auto reaction here goes pretty high. It's like the next wave on the M, like that next wave up, is being tested again. And then the final wave over here is where it breaks out. And you can see like the drop down right there. It's really interesting. So like, what would I conclude from that? What I would conclude from that is that if it's going to break out, I would conclude that this is going to go, and it's tough, man. I don't know. There's a lot of what ifs here. This is going to have a reaction up to the middle of, it doesn't look low enough yet. I got to be a little bit blunt about it. It looks like it could still come down, but this would have a reaction up, like it would come down a little more even, potentially. But I guess that doesn't really matter too much. It's a shallow S-curve, so wherever that bottom is, it comes back up to this marker. This is a triangulation on the bottom. Right there. Yes, sirree, Bob. Hits 462. Drops down again. Man, it's going to be ugly. Maybe to 440. And then should then cross back up. And this is like almost like a cup and handle. This is a really slow version of it. I'm just kind of drawing out what I think maybe happens. This kind of suggests it doesn't move until the 19th, which is really late. Maybe that is what happens, you know. So triangulation's trying to be like precise, but I mean, it is what it is. Let's just draw it the way we see it. So it spends a lot more time low than expected. And then, so like it's a dud, feels like a dud week or something. And on the 18th, which is a Wednesday, this was a Tuesday. It could be steeper maybe as well. I don't know. I'm kind of drawing like the least steep right now, but actually this kind of makes sense because I would imagine that it exits really fast. This one exited and entered. This exited and entered at near the same speed. So I think it would exit really quick. And then this is the moment where it kind of comes above the 50% mark. And then it rallies into wherever it's going to rally. Does not jive with that. So when I get back, what I'll have to do is take a look at this right here, because I think it's a really simple setup. What I do remember is that the trajectories build out pretty well to match like where it's going. So much like what we experience, we've talked about this before, like there are usually trajectories here that are pretty succinctly going towards where you're trying to go. You just have to know where to look. And then the acceleration of those trajectories into those points is also evident, though maybe it's not perfect. They're there in the bottom. They're there in the build out. They're there in the rebound. But yeah, I mean, this is pretty straightforward. Like you can just see it visually. it's going right where it needs to go. So what we could do when I get back is I can look at this again. It does feel like it's missing a chunk right here, but like it already went to the downside. I mean, we already know it's going that way though. So, interesting. Or we use these three, since we like those as a top, and we consider that it doesn't hit until a little bit later, like a couple days later. Here, it's actually not quite where I had it. And these early trajectories are kind of abandoned. They're more like pivots. And this one ends up being the more accurate trajectory. This goes through all three of those tops. Anyways, we'll have to do this when I get back because I got to go. But I'm going to come back today. GME is at 8%. I need to let this load for a second. It has not pushed over the resistance yet, so I don't think it's quite ready to go. It needs to get above this little like pocket. Otherwise, you could still risk coming back down, especially to gap fill. It might make sense to do that, to go ahead and come back and get the gap fill first before trying to advance again, especially if we think that AMC and GME kind of move together in this case. You may get more of like a build out here before you go. And it doesn't have to be this slow. I know I've got it like really slow, but I'm just looking at the triangulation from over here, and it does make sense. This was like a whip around wave, so this ended up taking about as much time on the opposite side of the wave. So it was like a 50-50 around the middle point here. It's pretty close. That to me would signify that it would take a minute. And I'm looking back here and I'm like, yeah, that's about right. If anything, like you would say it could take even longer. You know, that seems about right. Like an up, down, up kind of motion. So this is a rotational symmetry is what I'm trying to say. 1, 2, and then 1, 2. Before it goes back the other way. You know what I never did back then? I gotta go. I know, I keep saying I gotta go. I really do have to go. I need to leave. What I never did back then, I never did this drop-in thing. Because I didn't know about this at the time. Or I didn't think this was a thing at the time, I should say. There it is. This means we can calculate potential bottom here. It does seem like it would want to come back really low. Man, this is really low. I mean, it doesn't have to be perfect, but the flush is usually... Like, I guess if it found a higher bottom, you could push the flush up higher. But I would have expected that to be the middle. And again, it would be like driving the price back to here, which is low. So Friday being at like 410 isn't out of the question. Man, that's really low. It's like a gigantic retest of 410. Exactly what it sounds like. God. Oh, man. How big is that move? From 410 to 650. It's like 60%. All right, more on that later because I'm going to have to qualify that a bit better. I think that's a bit of a sticky situation. It doesn't look good to me to drop down here. I've already made that case that I don't think it looks good, but there is a possibility if the reaction's strong enough. It's going back through these levels. I think it's a bit odd, to be sure. There might be some more we could look at, though, when I get back, because I got to go. So this is a, keep saying that, but I really do have to go. This is tricky, because we just don't have, like, the same, this level right here is just really messy with the chop. And as the crow flies, like, straight line, I think it's already hit that creek. So I'm like, why would it go any lower? I'm not sure. I'm just looking at the measurement of that flush. It's such a huge flush that I have to, like, just take it for what it is. And it would potentially go all the way down to 410 and then react really hard and come back this way. But it would be a more violent upside on the positive. You wouldn't have, like, sideways at 450 for a week. You'd have, like, 3 or 4 days of ridiculous swings here. All right, we'll do this when I get back, because I think I want to do it. I got to go. I'll be back after lunch. Do not have, I wouldn't concern yourself too much with this just yet. I mean, I can explain better when we get back, but frankly, I don't know, man. Maybe just take it for what it is. I think if it crosses up and over and just starts having that reaction, I would be looking for it to go to 464. And, like, I would just leave it at that. I wouldn't go any further. I mean, another way to qualify this reaction, not on a reversal, just for you guys' sake while I'm out, is just take a trend. You know what I mean? Like, just draw a trend on those years right here, and just, that's it. Because there's always another way to chart the same thing. So, yes, this would indicate that it's possible that you could melt down first before you melt up to 410, which is really low. I think that's significantly low. But I would just take it with a grain of salt for now and look at this marker here. If it benefits you guys, I'll leave my stream on, but I'm not going to be able to talk for a couple hours. I don't think that would really benefit anybody. I feel like it's a waste of energy and all that junk. So, yeah, I think I'm just going to shut it down. But if it jumps this creek, you're good. If it doesn't, I think it's going to go down to 410, at least for now. And then we're going to have to wait. I don't think this is inevitable that it comes back up, but there's maybe there's a chance there. So, all right, guys, we'll talk to you later. I'll be back around maybe lunchtime or shortly after.